Welcome to another S&P 500 analysis. This is the midweek edition. Today is June 16, 2021. The Fed surprised the market by announcing it will likely raise interest rate 2 times in 2023, earlier than the market previously thought. Is this the way the Fed is telling us this is the last dance? We're going to take a look at today's wild price action, the market sentiment, the internal gold, US dollar, and the 10-year yield, and see what they are telling us. Stay tuned. Let's start looking at this intraday chart. This is a 3-minute candlestick chart up here on the S&P 500. And this is the New York Stock Exchange new high, new low. And this is the up-down volume ratio. And this is the VIX and the put-call ratio and the daily advanced decline. Okay, so as you can see, today it opened with a little bit of a gap up on the S&P 500, and it didn't take long, less than 5 minutes, it closed that gap. Then it started to fade down to this 4232.60. That is the all-time closing high that was made in May. And as you can see, that has been hovering this level, right before the Fed announcement. And here's when the Fed announcement came out and the market just immediately sold off, then chopped around a little bit and came back down, tested low, and put in a slightly lower low. Then during the Fed chair conference, press conference, then the market started to recover and got back above the May all-time closing high, and then just kind of chop around there. Then it started to fade again, and it closed down. So the market closed, the S&P 500 closed down a little bit under 23 point or slightly above 0.5%. And you can see the new high, new low. There were 165 more new 52-week high than 52-week low. But the up-down volume ratio, if you notice, throughout the day, it's been negative except for 2 little spike here. And during the low of the day, the up-down volume ratio was actually minus 3.5. And it came back up during the press conference and closed the session at minus 1.8. So there were 1.8 times more down volume than up volume. And looking at the VIX at the low point during the day, the S&P 500 low point, the VIX was almost 19. It was sitting at 18.88. Then throughout the press conference, it came back down. Then toward the close, it closed at 17.99, so it's close to 18. The market participant is starting to, build in a little bit more fear or less complacent. And also the put-call ratio, you can see it kind of creeped up throughout the day and came up and closed at 0.57. And also the advanced decline, the daily advanced decline, even the S&P 500 opened up, the advanced decline was negative. There were more declining issue than advancing issue. Only doing after the European market closed and shortly after the lunch hour back in the on the East Coast, that it was slightly positive, but then just shortly into the lunch hour, it went back to negative. And on the low of the day, it was actually almost 1,300 more declining issue than advancing issue. And it came back up a bit throughout the Chairman Powell press conference, but it ended the day with 789 more declining issue than advancing issue. And looking at this New York Cumulative AD Line, remember we were talking about the negative divergence on Monday when the S&P 500 closed with a new closing high, and the advanced decline was actually negative, and also there was a slight negative divergence between the the cumulative AD line and the S&P 500. As you can see, the S&P 500 pulled back along with the cumulative AD line. And looking at the NASDAQ 100, the NASDAQ 100 closed down 47 point or 0.34%. And the up-down volume ratio was slightly positive. It closed at 1.08. So there was slightly more up volume than down volume. But the daily advanced decline, the declining issue outnumbered the advancing issue by a margin of 464. And there were 96 more new 52-week high than new 52-week low in the NASDAQ market. And the NASDAQ cumulative advanced decline line also pulled back. Remember, it did the same thing as the SP 500, the New York Stock Exchange on Monday, where the NASDAQ 100 closed with a new closing high with a negative AD line. So there was a slight negative divergence. Right now, the NASDAQ 100 is pulling back along with the cumulative AD line. So as you can see, the sentiment is getting a little bit less complacent. It's coming up to this 18 level, although it's still under this 20 level. And the put-call ratio is getting back, above the 0.5 level, although it's still below the 0.75, but it's sitting at 0.53. Let's take a look at the daily price action of the S&P 500. As you can see right now, you see that the S&P 500 pulled back. Remember on Monday, it put in a new all-time closing high. Then on Tuesday, it put in a new all-time high, but unable to make another closing high, and it sold off. Then today, you can see that that sell-off from the Fed announcement, and then bounces back as the Chairman Powell press conference proceed, and that kind of lift the market back up a little bit. So right now, we are still looking for more pullback and possibly down into this area here. That would be between somewhere around 4180 and 4170 area. And if it doesn't hold this level, then we expect it to possibly come back down to this 4060 area and close to the 4050. Now, of course, there is also the upside scenario. We still have a all-time high from the Globex E-mini S&P 500. So we got to keep that in mind. Although, from the way things look right now, we might see the market pull back a little bit more before it come back on a bounce to attack that all-time Globex high. And here's the NASDAQ 100. You can see the NASDAQ 100 also pulled back on the Fed announcement and then came back up toward the close here. And you see this is the Monday all-time closing high and also the all-time high. So right now we're essentially looking for a continuation of a pullback. And remember this pivot high here. So we want to see would it be able to hold this pivot high. If it doesn't, then again, we're basically looking for this 13,713 level as the next potential support. And if that doesn't hold, we're essentially looking down here in this area here. Basically, this double bottom pivot high here near the 13,400. And for the Russell 2000, it continued to pull back, and it is sitting here testing this 2297 support level. So I want to see would it be able to bounce off of it and come up to test the all-time high. Now, if the S&P 500 and the NASDAQ 100 come up and make another new closing high, and the Russell 2000 continue to pull back, that would be a warning sign that we should be very cautious in this market. And for the Dow Jones Transportation, it seems like it is destined to come down to this 15,000 level to test for support. So we'll keep an eye on it because it broke this support level here. And basically it's just been chopping around here. And today it's down another 166 point or a little bit over 1%. And the Dow Jones Industrial also follows suit along with the Dow Jones Transportation pulling back. And it came down, and today it closed down 265 points. At one time it was down more than 300 points. So it closed down 265 points or 0.77%. So right now we're essentially monitoring to see would it be able to find support somewhere around this 33,500 area. If it couldn't find support here, then we're essentially looking at this 33,000 level. Now again, we still expect the Dow Jones Industrial to come back up and put in a new closing high. So we might take a little bit more time, possibly maybe finish this little pullback and then get a bounce off of that support level. Then the next bounce up will likely maybe come up and put in a new closing high because of the Dow theory is still in effect. In the broader market index, the New York Stock Exchange Composite, you can see is also pulled back and sold off today. So right now we're essentially looking to see would it be able to find support here around this area, just slightly above 16,400, and see would it be able to find some support. If it's not, then we essentially are looking at this level down here somewhere around the 16,000 level. Let's take a quick look at the 10-year yield. You see that the 10-year yield shot up today after the Fed announcement. On Monday, you can see that on Monday it's starting to move up, right, after last week hit a low below 15, somewhere around 14.5. So today it shot up and closed at 1.569%. And no surprise that we see the dollar also shot up and got above our zone here. Remember, we were talking about this zone here between 89.74 and 91.24. Today it closed at 91.39. So we're going to see would it be able to move up here to this 92.11 and possibly get into this zone here. Then we'd be looking at 94.08. So that's the key, is that will it be able to continue to move up and into the next zone. And no surprise, as the US dollar move up, the gold, the precious metal moved down. You can see that it sold off today. Definitely the US dollar and the 10-year yield is having an impact on the precious metal market right now. And finally, for those that are trading the SPDR, the ETF for the SP500, I have a composite volume profile, and this is the level to keep an eye on, 417.39. That's the point of control of that composite profile. And also look at, keep an eye on this 420 area. Okay, so we have a high volume node here somewhere around 419.33. And let's look at the market profile for the ES, the E mini S&P 500. So you can see I have this Globex all-time high at 4258.25. That was put in on 6/15. Okay? And yesterday it was a nice and balanced type of profile. The only thing is the point of control for the tag, and you can see today's profile price action opened up and then came down and tagged that, kind of consolidate here. Then we got a liquidation break. If you look at this volume profile here, you see it build up a lot of volume here. A lot of people setting up position looking for a long, and then all of a sudden it got a liquidation break and came down. And right before the Fed announcement, as soon as the Fed announcement came out, and we got this sell-off, and the profile was pretty thin over here in terms of volume because everybody want to get out. And then it start to chop around here. That's when it start building up more volume, and also when it start coming back up, as Chairman Powell was holding his press conference. So it kind of built up a little bit more of a value area here. But at the end of the day, we see that the price came back down and dipped below the today's rewrap. So that kind of tell you that the seller have a little bit more control at the end of the day. Okay, so just kind of keep an eye on the price action for the next couple of days. Wouldn't be surprised, we see the single print get tagged in the next day or so. I haven't updated these level for today's profile yet, but you see that there is this single print area here for left by today's profile. So we could see this, maybe it will come up and fill this, the single print before it come back down and take out the single print and go below that. So we'll see, or it might just come down early in the morning, fill these, and then come back up and take out the all-time high. So anything is possible, but those are the scenario. So just keep an eye out for this and be sure to manage your risks. So with the latest FOMC announcement about the possibility of 2 interest rate hikes in 2023, that is certainly a warning shot that has been fired by the Fed. Now, the thing is, it surprised the market by putting out 2 interest rate hikes in 2023. So that's kind of like pulling in a little bit earlier to raise the rate. So now we know there's going to be 2 rate hikes in 2023. So the next thing is that could it possibly that we're going to get a rate hike at the end of 2022 or in the middle of 2022? If things are heating up more, in terms of the inflation, then we probably will start hearing from the Fed on hint that they're going to it start increasing rate probably by the end of 2022. So in regardless, today's morning shot is a sign that we better prepare this as a last stance. So be careful. Don't forget to smash the thumbs up to help me promote and share this video. Thank you for watching and stay safe.